Well, it looks like we had a little hotter than we expected inflation during the month of December, up 0.3%. The forecast was for a 0.2 gain, pushes the year-over-year number up to 3.4% from 3.1% in November. That's not what the Fed or the markets want to see. However, the core rate comes in at 0.3 as expected, which pushes down the year-over-year core number to 3.9% from 4%. So it's basically what we're seeing here is a little bit worse headline and as expected core, and the core is going to matter more than anything else. Index for shelter is what the BLS says contributed most of the rise in December. Energy rose, increases in the electricity index and the gasoline index, which is a bit of a surprise. So I'll look at the rest of this breakdown here, guys, and you can look at whether the market is freaking out over this.
We've got a move, not a freak out. We're negative by, let's call it 0.10% on the S&P 500, 0.1% on the S&P. We're negative on the NASDAQ by, let's say, 0.03%. But the bottom line is we are off the highs of the session. Similar move in the bond market. So yields were lower, now they're higher at the front end by 2 basis points to 4.38. In foreign exchange, the euro turning around. The euro was positive against the dollar. That currency pair is now negative by 0.15%. 109.56 on the euro against the dollar. Mike McKee, it's not just CPI. Got to say, jobless claims.
Jobless claims, well. They continue to be what they were, 202,000. That is down 1,000 from the revised 203 the week before. But at this point, we're still dealing with holiday weeks and holiday adjustments, and that's always an issue. So it does tell you that the labor market is still tight, but we can't put a lot of faith in the exact number. Continuing claims, 1,834,000. That's down from 1,868,000. So a tight labor market.
Yeah.
Headline prices up a little bit. Core prices on a year-over-year basis going down.
I wish you could see McKee as he plows through this data, folks. It's years and years of experience. Mike, I'm not doing that. I got the cliff notes here. And the answers I'm seeing in owner's equivalent rent, blah, 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 month over month, numbers you follow, up 6.3% year over year. Now, we'll have that come out here in a couple hours and see what housing is doing, rental, and all the rest. But are we underestimating that if there's already rates coming down, that maybe there's a rekindling housing boom out there? Is that an uncertainty?
There has been a suggestion that that could be happening, but that would be too early to get into the CPI right now. It wouldn't show up. We have seen ongoing strength in rents, which has been a reason for seeing ongoing strength in the housing numbers. But at this point, it's more just the fact that housing prices have not moved down very quickly. Here's the rent number. Rent of shelter up 0.3. Up at this point 0.4 after 0.3 the prior month. So rent of shelter, rent goes up, and then owner's equivalent rent is up 0.4 after is up rather 0.5. I knew it was 0.5. I said 4. I don't know why. After 0.4. So we saw the housing numbers go up, and that did not help.